One is that financial instability has become more frequent, systemic, with greater responsibility on the developed countries. That is, the current economic situations reflect the globalization process of the last 3 decades. And that's where we all feel very frustrated in a way, because liberalization and deregulation have made the world increasingly interconnected, interdependent, but also richer, but much more unequal. So, because the world has become increasingly financialized, already Joe Stiglitz said about it, and you gave the figures, Cristalina. In 1980, financial assets and GDP were similar. Honestly, it was 13 trillion financial assets, 11 trillion GDP. But in 2017, 14 times is the value of global financial assets, 14 times more than GDP. So this has to is telling us something. It's telling us that we have a problem, that is the decoupling of the financial system also in relation to the real economy. And I think this is something that we need to bear in mind. And particularly, what's the impact the country's integration in the international financial system has been segmented. Segmented in the sense by risk level and by market size. And who are the losers here? Honestly, the periphery, the countries of the periphery. I'm quoting Friedrich, of course, Centro Periferia, of course, because it's the central or the rich and the peripheral that are really in trouble. Because countries in the periphery, like us, I mean, me, Mexico, Argentina, all of us, we are more exposed in a way to the cyclical effects, and our difficulties to revert crises are much more larger and bigger. The second point I want to make is that since the crisis of 2008, efforts to reactivate advanced economies have not had their intended impact on the real sector. The central countries have had the space to implement expansionary monetary policies aiming at recovering economic performance, but in the aftermath of the global financial crisis, the decoupling between the financial and the real sectors, because of the ultra low interest rates, have boosted asset prices and encouraged the accumulation of debt, while the real sector has failed to regain dynamism. So, in the post crisis economic performance, and you said this in Davos, Cristalina, we were looking at this. What is the world confronting today? The world is confronting low trade, a very significant decline in the volume of world trade, a slowdown in the growth of investment, low productivity, low interest rates, low inflation. And and this is very crucial for the world today, because at the same time, global debt levels have reached record highs, growing at a faster rate as GDP, as we said. Look at this, the long, low interest rate have encouraged borrowing of households, of business, governments. Global debt has reached today a record high in the second half of 2019 of $251 trillion, representing 320 percentage of GDP globally. So the world has a tremendous global debt, which is growing above its GDP. And cheap money is increasing the vulnerability of the periphery, of the countries of the periphery, and with many unintended consequences. Thirdly, unconventional monetary policies in advanced economies have had unintended consequences in developing countries. That is, low interest rates in advanced economies have encouraged financial flows into developing countries in the search of higher yields, which on the one hand has broadened the access to financing for development, no question about it, but has also simultaneously led to higher sovereign debts across many regions. And in our region, for example, in December 2019, the debt ratio to GDP is 54%. It's very high. We used to be on the lower levels below 40%, now in 54. And of course, Argentina being the first, I'm sorry to say, but Brazil is not far for you. So So this has contributed or has had a very big impact, for example, on the appreciation of the region's currencies, compounding the effects of commodity dependence, and the exposure of the countries of the region to external shocks has been very important, with limited policy space to implement fiscal and monetary policies. We have to go into adjustments, and probably you're going to talk about that, how limited space we are having in our countries of the periphery. And fourth and last is that the concentration of economic power has strengthened the existing asymmetries in policy autonomy between the actors. That is, the countries in the developing countries have opened their economies. We open our economies to financial institutions to try to attract capital and technical expertise, but our economies are quite smaller compared to the advanced ones, and we have become more vulnerable to small portfolio decisions in advanced countries. And I would say that what we need to do is that this asymmetry is implying that counter-cyclical policies is always an available policy, of course. But the problem is that for developing countries that are debtors or that are borrowers, the adjustment is compulsory. It's compulsory, punto. However, for the lenders or for the developed countries, adjustment is voluntary. That's a huge asymmetry. For ones it's voluntary, for the other ones it's compulsory. So, in summary, we need to try to be, how do we bring together a more co-responsibility or a shared responsibility between debtor and creditors? How do we make this historical asymmetry to build in a new financial system in the future?